The topic for today's videos is budgets and forecasts. Everything you've done in accounting up till the present time has been on transactions that have already taken place. So you're basically recording things that have happened. With budgeting, you're going to plan for the future. So you're going to try and plan what transactions you expect to take place. So because it's drawn up in advance, we usually do it for more than 1 month, so we can get an idea over the next budget period what amounts we expect to receive and what amounts we expect to pay. I want to start off by going through the differences between a cash budget and an income forecast. Your cash budget is based on money you expect to receive. So if you are wanting to do the cash budget, you must ask yourself, is money going to be involved? If money is going to be involved, then you're going to record it. And because you're recording the amount of money that you expect to receive, you will be able to work out how much money or what your bank balance is expected to be at the end of the month. On the other hand, your income forecast, the purpose of this is to calculate your expected profits that you expect to make here. And that is going to be based on income and expenses. Remember, income minus expenses gives you profit. So you are only going to ever record income and expenses in the income forecast. But you're also going to take into account any year-end adjustments like income accrued, any non-cash expenses, etc. into account. So budget, it must involve money. Income forecast, it must only be an income or an expense. If you have a look then, if you've got receipts higher than your payments, you're going to make a cash surplus. If your payments are higher than your receipts, you're going to have a cash shortfall. Now, because you do this in advance, you would then be able to apply for an overdraft facility if you're going to need it. So if you can see that your bank balance is going to become negative, in advance you can go to the bank and arrange with the bank manager to have an overdraft facility. On the other hand, if you find you've got a whole lot of extra money, okay, that you're not going to need to use, don't leave it in a 0% interest rate account. Rather take that money and invest it elsewhere. Maybe buy fixed assets, maybe pay off a loan, or those kind of things. And with your income forecast, obviously if your income is higher than your expenses, you're going to make a profit. If it's lower than your expenses, then you're going to make a loss. Right, let's move on now to the layout of the cash budget. You'll see you have a section here for all your cash receipts, like cash sales, cash from debtors, rent, income, etc. You then have a section for all your cash payments, cash purchase of stock, payment to creditors, salaries, and so on. And that will give you either cash surplus or deficit. You're given a bank balance at the beginning of the month and your predicted bank balance at the end of the month. And I said to you, you're going to do this for more than 1 month. So let's just see how we work out this bottom now. If you have cash receipts of 10,000 and you have cash payments of 8,000, that's going to give you a cash surplus there of 2,000. If you then take your 2,000 and you add it to your 4,000 opening bank balance, which will get given to you, you will have a bank balance at the end of March of 6,000. Now the balance at the end of March will become the opening balance at the beginning of April. You will then repeat the process, so you'll take April receipts minus April payments to get a surplus or deficit, plus the 6,000 to get your end of month balance. The end of month balance for April will become the opening balance for May. Okay, so that's what a cash budget looks like. Let's now go through a worked example. Just before I go through this worked example, I just need to explain to you something regarding the difference between the transaction month and the payment month. When you're talking about the transaction month, you're talking about the month that the transaction is going to take place. When you're talking about the payment month, you're talking about when the payment is going to be made. So if you look at credit sales, for example, if you take your total sales being 100 Rand. And of that, 40 Rand is for cash and 60 Rand is on credit. The 40 Rand cash will get recorded in the transaction month because that's when you're going to receive the money. But the 60 Rand credit sales will only get recorded whenever the debtors are going to pay you back. So it's quite important for you to understand the difference between the two. Credit sales or credit purchases are only going to get recorded in the month that they're actually going to get paid back. Right, so the first thing we're required to do here is to calculate the cash received from debtors for October and November, round off all calculations to the nearest rand, and then they tell you that credit sales for August and September of 2025 were both 155,520. Alright, let's look at this thing here called a debtors collection schedule. The first thing you're going to do, when that was actually done for you, is they filled in those two credit sales amounts for you. Now you need to read the information. So they tell you the current markup is 52%, but you're going to increase this to 75% from the 1st of October. Okay, don't worry about that now because we're going to need to use that for our cost of sales in a minute. Right, they then tell you that cash sales makes up 20% of total sales, which are expected to be 210,000 and 245,000 for October and November, respectively. So if you come down here, if cash sales are 20%, you'll take your total sales times 80% for credit sales, your total November sales times 80% to get that credit sales. So that I think is fairly straightforward. Okay, you just take 80% of each of those two amounts to get October and November. Now you need to read how debtors are going to pay you back. So the first thing they tell you is 50% in the month following the sales transaction month, and they get discount. 44% is the second month following the transaction month, and 6% will be written off as bad debts. You don't need to worry about those bad debts for cash budget, because bad debts do not involve any money coming in or going out of the business. So that you would only need to know if you were doing your income forecast, because bad debts is an expense, so you'd need to record it. Alright, so you need to remember this now. 50% in the month following, 44% in the second month following. So if we start here now with September. September, 50% are going to pay you in the month following. So to get this amount here, you take your September sales, you multiply it by 50%, and the reason why I times it by 95% is because I get 5%, I give 5% discount. So you're not going to receive as much. Then 44% are going to pay you 2 months after. So you go from September to October, so 44% are going to pay you in November. I should have actually started up here, I'll just go back to it quickly. 44% of August will pay you 2 months later, September to October. Excuse me. Right, and if you go to October, the only amount you're going to receive there will be the 50% in November less 5% discount. So you take 168,000 times 50% times 95%. And we're going to receive nothing in November. You then simply add up these columns here, and therefore cash received from debtors for October will be the 142,301, and cash received from the debtors for November will be the 148,229, and those amounts can then get recorded into your cash budget under the relevant month. Okay, there's one other thing I can work out now, and that is my cash sales, because I was missing this cash sales amount here. Okay, I just take 20% of the total sales for November, because that is when I'm going to receive the amount of money. 20% of November. Excuse me again, sorry. Okay, let's continue. So we've now done question 1. They're now telling us to complete the cash budget, and we've already done some of those figures. Now we need to read the rest of the information. Okay, let's move down now and see where there are gaps. Anything that's typed in black was given to you. Anything that I've added in red you had to calculate. So we finished with the receipt section, as I just said. Right, now we need to worry about the purchase of stock. And they tell you here that all stock will be purchased for cash and stock will be kept at a constant level. What they're telling you there is whatever you sell in, let's say, March, you will replace in March. But remember, the price that you pay is going to be the cost of sales amount. So if we look at what we required here, we need cash purchase of stock for November. So to calculate that, I'm going to take November total sales, which they gave you, and the markup they said is going to be 75%. So I will divide by 1.75, and that gives me my cash purchase of stock. So it's very important you remember, always use cost of sales when dealing with the purchase of stock. Okay, let's move down now. The next one we see here is the loan repayment. There's salaries, there's drawings, and so on. So we're just going to work through the information. The reason why I work through the information, I'd rather read it through once and jump around than read it looking for the one amount, read it again looking for the next amount. Alright, so we're right up to number 5 now. A loan of 90,000 Rand was received on the 30th of September. Okay, in other words, before the budget period. And it says it will be paid in 24 equal monthly installments on the last day of the month, together with interest on the outstanding loan balance. So to get your loan repayment, you're going to take the 90,000 and you're going to divide by 24. So the 90,000 divided by 24 gives you 3,750 per month. Then in terms of the interest now, we take the loan original amount minus what we paid. We then times by 14%, but we only want for 1 month. We want it for the month of November. So you divide by 12. So you take the original loan minus what you've repaid times the interest rate, divide by 12, and that's how I got the 375. Sorry, not 3750, the 1066. Okay, the next one tells you that on the 1st of November, the salary of the shop manager will increase by 12%, whilst the wages of the 6 shop assistants will increase by 120 Rand each. Okay, if you have a look here, the shop manager is straightforward. Okay, you take the 12,000 and you add on the increase of 12%, and that gives you 13,440. In terms of the shop manager, the shop assistants, they said you had 6 people. Okay, 6 times 120 gives you 720. So you're just going to add 720 to your actual wages for your shop assistants. So you take the number of workers, each getting 120, and add that on. Alright, I did not waste time in working out these final answers now. But remember, total receipts A minus total payments B gives you a cash surplus or shortfall. This opening bank balance was filled in for you, and it was in brackets. That means this balance is an overdraft. It's a negative bank balance. Whatever answer you get here, those 4 X's, becomes the opening balance for the following month. You will then take C minus D plus or minus your XXXX to get the closing balance, and so on. Okay, let's move on now to the next questions. They say, at the end of November, the total actual sales for the past 2 months amounted to 308,000. Should the accountant be satisfied, explain and state 2 factors. So they're telling you what the actual sales were. You need to compare that to your budgeted sales. So if you have a look here, if you take what they told you, you had October, November of 210,000 plus 245,000, your budgeted figure was 455,000, but your actual sales were only 380,000. So therefore you're not going to be satisfied with that. You haven't achieved your target. Now you've got two things that you should consider. Perhaps they shouldn't have increased the markup. They said they're going to increase the markup to 75%. Maybe that turned some of your customers away. They went elsewhere. Perhaps the economic climate is not very favorable. People haven't got enough money to just spend as they would normally spend. Maybe there's a new competitor in the area, and obviously if you've got competition, that's going to affect your sales. So anything along those lines there. Then the shop assistants feel that their proposed wage increase is unfair. Do you agree with them? Give 2 reasons for your answer. Okay, remember there were 6 people, so each person, if you take 18,000 divided by 6, earned 3,000. So the increase was 120 Rand over 3,000, which gives you an answer of 4%. Remember, the manager got a 12% increase, so of course they're not going to be happy. And added to this is this 4% is actually below the inflation rate. In other words, the cost of living is increasing by more than their wages is going to increase, or their salaries are going to increase. So that is why they're dissatisfied. And then list 2 strategies that the accountant consider in December to improve the cash flow situation. Okay, so obviously you're going to end up with a negative balance, which I didn't calculate. You need to look at reasons for this. Perhaps the owner's drawings are too high. If you have a look here, his drawings are 30,000. Perhaps that's too high considering the financial state of the business going forward. Maybe you should consider buying stock on credit. Remember, you buy for cash only. If you can do that and pay your creditors after debtors pay you, you can use debtors' money to pay back your creditors, and that will help your cash flow. Maybe the owner could increase his capital, put in more capital, and so on. Okay, so that's just a worked example on cash budgets. I'm going to do an additional video, which is another activity on cash budgets. But for now, guys, that's it. Thank you.